Alright, I've isolated a pretty good example of a one up, one down. Now remember the one up is called a hammer, and what that means, we're hammering out a bottom of on the chart. So I'm going to look at these two candles here. This one, although we had another one before that, in fact we have two up, one down. In fact we have two up, two down. But nevertheless, let's focus on the ones in the middle here. You can see we spiked up and down, forming this what's called a hammer candle. So we have the spike high on the upside of this downward trend, and then we get a spike low, a doji reversal spike low pattern over here, single candle, and a spike high hammer candle. And the combination of these two, in this case it's very, very good because we've got two one-ups, two ups, and we've got two downs. So even more of a confirmation, we've got two hammer candles, two doji candles, and that forms the one up, one down pattern. Now you can imagine just one of these in isolation. If we have this one over here combined with, say, that one over there, that gives us the one up, one down reversal pattern. It's a hammer candle combined with a spike low doji candle, and that's a very powerful reversal pattern, a two candle pattern. In this case, we're well below the two Bollinger Bands. Once again, the Bollingers are very close. We've got an oversold stochastic, a beautiful reversal signal, and a great trade. As you can see, it started to develop over time, and even if we were taking profit here, that would have been a 100 pip move. A beautiful opportunity to profit from the market. Right, I'm going along here because this is now the pound chart, so I'm going to see if we can find anything more interesting. There's a little spike low there. Often these spike lows aren't very large candles. Sometimes they're very clear, very large, but there's a little one there at the bottom. Here's one at the top. Now, there's four reversal patterns there, four reversal candles. First of all, we have the spike high doji, just up to the 100 period Bollinger Band. Then we have this is a one up, one down type of thing, just a little spike down. But then we have this bearish engulfing candle. So we have the spike high, something that's not really very clear. And if we got into the trade there, that would have been fine. Then it's confirmed by this bearish engulfing candle. In other words, the black candle, the bearish candle at this stage engulfs the body of the previous bullish candle, and then we get another spike high, another doji candle, which confirms this whole four candle sequence really is confirmed by three reversal candles, the spike high, the bearish engulfing, and the next spike high. Those three working together at the Bollinger Band confirm the reversal, and then you can see shortly after that we have a very strong move downwards from 199 to 197. That gives us a 200 pip move. Here's an example of a very, very aggressive bullish engulfing candle. That's almost 170 pips long. Once again, it's a very clear reversal signal. Obviously you can't go into the trade with 170 pip stop loss, but if you wanted to reduce your leverage to a very small level, then you could do so. Once again, we've got stochastic divergence. In other words, the price is moving down, the stochastic's moving up. We're through the two Bollinger Bands, then we get this extremely aggressive bullish candle, which gives us an entry signal, albeit with a very large stop, and therefore you'd have to use a very low leverage. Here's a good example of a one down, one up, and a bullish engulfing candle. There's the spike down, the doji, and then we have a spike up. So that's a one down, one up. In other words, we've got the hanging man candle followed by the spike high. It's not quite a doji candle because, in fact, the body of this spike high candle forms a bearish engulfing pattern. This black candle here engulfs the whole section, albeit very small, of the previous candle. So we've got a one down, one up combined with a bearish engulfing candle, a great entry signal for a move lower. I'm just going to show you one more example of this area here. You can see we've got two small reversal candles followed by this very clear spike low, and then a bullish engulfing candle following that for a move up towards here. Often you get 3 or 4 spike lows or doji candles one after another, and that becomes more and more powerful the more dojis we get. So sometimes you can get 3 or 4 or even 5 or 6 dojis in a row, and that'll give you, if you didn't get in on the first 1 or 2, that gives you more confidence that this reversal is beginning to take shape.